Good evening, dudes and dudettes. Welcome to tonight's show about Torch. In this video, we're going to talk about Torchlight, its potential, all the due diligence you need to understand the merger, as well as everything you need to pay attention to for tomorrow's market. Alright, let's get into it. So today is a very interesting day for Torch. As you can see, the price dropped about 30% in a day. Bam! Drops 30% in a day. Compared to the previous open, which is around $7. It went up to $11, and bam! It goes down to $7 again. What a roller coaster we have right now. As you can see, I draw up all the support line for you guys. So we are down from the 7.5 support line, and we're sort of up-ish aftermarket at the $6.5 support line. But this does not matter, okay? This doesn't matter at all, because as I'm going to go into this entire merger thing, the due diligence of all the entire merger thing, and then why today's price drop literally doesn't really matter. It's literally a equity financing or capital financing sort of play that it's normal. We expect it's going to drop 30%. And well, here's why, okay? Here's the math of why it dropped by 30% and why it's normal, and then what are some risks and what are some rewards upcoming in the next few days, particularly in the next 2 days. All right, let's get into this. So, first of all, we have to say the disclaimer as usual. Okay, disclaimer, we're not financial advisors, we're not giving financial advices, and everything is for entertainment purposes only. All right. So now, first of all, we have to understand what company is Torchlight merging with? Torchlight is merging with a Canadian stock named Meta Materials. And for those of you who are investing just because you want our money or something like that, you don't really need to know what they do. Particularly, they essentially engage in very innovative processing of producing life sensor materials. And if you want me to make a video about what exactly they do, I will do it. If you guys can leave a comment down below to tell me that, okay, due diligence dudes, we need the very detailed due diligence or DD on Meta Materials, and why a lot of people are saying, in this merger, Meta Materials is getting the longer end of the stick, and why holding it until October will be a great idea, right? You guys probably want to know, or maybe not. But who knows, right? Just leave a comment below, okay? And then why would they want to merge with Torchlight? Because Torchlight is literally not making money, right? They're essentially a oil and gas company who holds oil and gas assets or equipment or land that can be accessed or can be modified or can be adjusted to create oil production. But currently they do not have an oil inventory. They just own the stuff to engage in such activity. So why would they, engage in this merger? First of all, it's kind of cheap because Torch used to be a penny stock. Thus, they pay a price to merge together. They will acquire more liquidation, more leverage over time, more exposure to the U.S. market, because the U.S. market is the biggest and the most liquidated market, the most liquid market in the entire world, which will produce the shareholders or the board or the company Meta Materials will give them more access to more capital over longer period of time or even in a shorter period of time. Essentially, their stock price can skyrocket to the moon when they merged, right? But by the time they merged already, and then when Torchlight's ticker becomes Meta Materials, the going to moon price rocket is probably already accounted for when the first day we can trade them on Fidelity or on Robinhood. Because right now, if you're trying to just trade out on the OTC market for this particular stock, essentially the ask and bid spread is so large. Where 2 days ago, when the price was still at $7 and I was trying to buy a share at the market price on Fidelity is already reaching $11. So the cost basis for us will be super high. And my prediction, again, we're not financial advisors, we do not get financial advices. By the time the merger is done, the stock's probably going to trade at $12 on the US market. For those of you who can get hands on this thing, maybe consider it would be safer than in Torch, okay? Because Torch is going to be super volatile in the next 2 days. And here's the thing, why, right? So the combined merged company to shareholders. So let's say combined, when the company combined and it have 12 million shares. Okay, when you have 12 million shares, 75% will belong to the metamaterial owners and 25% will belong to the Torch owners. Okay, this is a very easy way to explain how it works. So every share you trade right now on Torch is essentially you trade it at a premium. So eventually, when you receive the after merger shares, you're gonna get a discounted amount of shares. And according to the board meeting happened about a week ago, Torch actually gave us some very interesting news. Okay, so they're trying to basically increase their aggregated offering over the next week or so. So right now on the 14th, they essentially newly issued, but not really, newly issued 28 million shares stock to a underwriter, which means they haven't issued the stock yet, but the underwriters can already sell the stock or do some short selling. It's not really a complicated process, but if you were trying to get into the math, it's a little bit more complicated in terms of the logistics and how the filing works. But essentially what it does is it diluted our value or diluted our share by 20%. But if you go back and look at on the 14th, the share from 14th to 15th, the share actually gapped up. So it doesn't really make sense. What does it mean is they have a delayed effect due to volatility. That means due to the fact that we invest so much money on the 14th on that day after market or in the market, we literally pumped in about $200 million into the stock. Then it offset the 20% dilution. But today, because the volume is dropping, because see, we have a general change of hand today and we have a massive sell-off today. Therefore, the dilution really hits the dilution really hits the market. So today they essentially issued 21 million shares at the market price of $7.9, or at the time where they filed is $7.9. That means it diluted our share by about 20%. So it combined today. So combined from the previous dilution to today's dilution, we're supposed to see a share decrease by about, let's see. We're supposed to see a share decrease by about 40%. So let's see if this is actually 40%, okay? Well, this is not the right thing, and this is the right thing. So let's see how much percent it actually decreased by. Ooh, that's a lot. Wait, let's see. I don't think this is the right one though. I think this might be the right one, isn't it? Weird. This software isn't working. Well, let's just do the math on our head. So from 1088 to $7, that's about 30%, correct? Where's my G ink? So this part accounted for the 30% dilution, and after market we accounted for a 10% dilution. So I mean, again, I was gonna make this video yesterday and the day before, but I was a little sick. Sorry, guys. So essentially, the stock price diluted by 40%, which is normal, which is expected, right? Because they issued so much shares, and those shares are not controlled by them. It's not controlled by the principal owner of Torch or us. It's basically owned by the underwriters, which is a institutional investor, right? So those guys can literally do some shorts and they can pump down the shares, which is in the financial interest of Torchlight. Here's why it's in the interest of them. Okay, here's why. So the last day for special dividend. So as one of my subscribers mentioned, there's the last day of dividend. So the last day for being on record for the special dividend is as of today, which is June 22nd. And in order to be eligible for a deal, you have to hold the stock until the 24th. So whoever bought today at peak, we become backholders. Okay, let me tell you what is my average price. My average price is around $7. Well, to be precise, it's about $7.61. Okay, this is my average price. I'm very transparent to my shareholders. To my subscribers, not shareholders. So you guys know what is my real cost is. So right now I'm literally down. Okay, I'm literally down by 61 cents, which is a lot. But I just want to write this out. I only have a couple of hundred shares. I just want to write it out and see if my prediction is right. My prediction is right now they're at their maximum offer shares. So the 40% dilution is not their maximum dilution yet. Their maximum potential dilution is they can essentially potentially dilute us by 95%. Okay, our share for us. But it's just too vicious if they do that. In order to do that, they have to do a reverse split. So every 100 share we own will not be 100 share after reverse split. A reverse split, depending on they're trying to do a 1 in 4, 1 in 20, or something like that. So potentially, if they do a 1 in 20, that means 100 share we own right now will only be 5 shares. So why is it in the company's interest to do that? Well, here's why. So special dividend is offered in a share per share basis, right? And if they liquidate their asset, that means every share we own right now, they probably will give us $1. Well, according to our prediction or our math, the special dividend is gonna be between $1 to 50 cents. Okay, a lot of bullish people are saying it's gonna be from $1 to $20. Impossible, dude. $20. The only possible when it becomes $20 is the share price go up to $40. Is it possible? Probably not, right? So realistically speaking, we're looking for a $1 or a 50 cents payoff in a special dividend. And if you have 100 share right now, it will give you $100 by June 30th, right? And you have, if we're doing the 50 cents one, it will give you $50, right? If you have 100 shares. But right now, they have 145 million shares. If you add up all the other shares, you'll have 200 million shares. If it's $1 per share as of today, that means they have to spend 200 million. And their asset, right now, the appraisal for the asset, according to our calculation, is about 150 million. Okay? Or 100 million. So they kind of have to dilute us by 50%, right? Unless oil price keep rising. If oil price keep rising, that means their asset will worth more, right? Their asset will worth more. Then maybe, So basically, the reason why I have a board meeting is to make sure that they don't pay off too much dividend. And as of today's drop, a lot of people are going to tell you it's about dividend capture. So whenever a special dividend comes out, or whenever more shares come out, there's going to be like a dividend capture, which we already talked about, right? Dividend capture, we expect a 40% drop, which it dropped by 40% today. Right now, it's probably like a 31% drop from the solid candle chart instead of the highest point. But if we counted for the highest point for today, it dropped around 40%. It basically captured the dilution and captured the dividend, right? And a lot of people are saying, it's short interest pressuring movement before cover. That kind of makes sense, but kind of doesn't. Because when is short required to cover as a merger happened? Let me tell you this. This is the truth, okay? The truth about when they have to cover. And a lot of people are spreading you misinformation. So if, say, Torchlight if there's no merger, okay? If the merger is not happening, that means the shorts do not require to cover because this stock is a ongoing, continuous business, right? But right now, they're merging. So they're required to cover before the merger is done. Why? Because when the merger is done, this Torch ticker does not exist anymore. It becomes metamaterials. Therefore, every previous financial transaction, every previous obligation options has to be exercised or has to be disposed before the date of the merger. So then they have to cover by the day of the merger. So in the interest of the hedge funds, they want to drive down the price as low as possible one day before their required cover day, which is one day before the merger really just finished itself. And then right now, the company is saying the merger will probably be finished by the 30th. So right now we have 8 days, okay? We have 8 days. The battle is 8 days right now, okay? We have 8 days to battle the shorts until they have to absolutely cover. I mean, a bunch of small firms probably already covered to fill the gap, like a $3 gap from the 7 to 10. But today there are more people short at 10. Why? Because they still have 8 days to play around with this, okay? So what do we expect in the following days? First of all, for those of you who are holding until the 24th, like me, who just want to see, how much dividend payout they're actually give us, we essentially, our shares we bought in today is locked, right? And whatever traded until the 24th, so basically our shares we bought in today is essentially locked for eligibility for the dividend deal. No? And the 40% drop is, it's normal, it's expected, and the smartest play for us to do was probably buy in aftermarket. But I know you guys probably bought in a little bit in the mid market. I mean, I made some quick profits today too. I sold off, I bought in, sold off, bought in a little bit. So essentially, I'm okay with losing the money I've already made. So then I can literally wait it out for so essentially, it's a quote unquote lock, not really lock, because you can still sell it, but when you sell it, you're not eligible for dividend. But I kind of want to see if my prediction is right for the dividend, so then I'm gonna wait until 24th. So for us, if we look at the support line, our maximum down range we have. So right now, let's just say the aftermarket price, the $6.5, is where it's gonna open. Basically, we have a risk from $6.5 to $5 going back down. Okay, but we also have a upward moment. We have an upside all the way until $10. So if you buy in again tomorrow, even though it's not eligible for the dividend, we can trade for upside or trade for the short squeeze. Okay, but if you look at the volume, right, this is abnormal volume right here. So the sell-off, basically we sell off the volume, half of the volume that we increased by yesterday. So we expect the price to drop by 40% by today, which it did, right? So tomorrow is a new day. If tomorrow we have another, a volume reaction, right? If we only just have, today's sell-off volume to be bought in volumes, that means our price can probably go up to $8. So if you buy in aftermarket today and we have a lot of volume tomorrow, that means you make a $2.2 instant. You make a $2 instant profit. Even though our shares are locked, you cannot really, sell it because you want to eligible for the special dividend. But if the price can stabilize at $8, for those of you who are buying aftermarket until the 24th, you not only get the dividend deal, but you also made a $2 per share profit, correct? But guys, listen. There's also a big risk here, okay? If everybody is trying to reverse squeeze us even more, right? They're trying to push down the price to $5 until the 24th. That means what? We lose about $2. So you have a $2 upside and you have a $2 downside, right? So basically, the expected value of all the risk equals to 0. That means it's actually a fair bet. It's literally a gamble, okay? It's 50-50 gamble right now. What happens tomorrow, what happens on the 24th dictates what's going to happen, around the 30th when, we expect the merger to be completed. Okay? So we expect a lot of volatility. For those of you who are just trading options, it's a huge opportunity for you guys. Selling puts or buying calls in a short period of time. Too bad they don't have weekly options. If they have weekly options, the volume is going to go skyrocket up to the roof, guys. But anyways, this is for today's video. This is about all the DD you need for Torchlight merger. And I know the viewership is declining a little bit because a lot of you sell off. But I'm telling you, it still has potential. And I mean, again, we're not financial advisors. We do not give financial advices. We're not financial advisors. We do not give financial advices. However, however, everything we say on the channel is for shits and giggles and for entertainment purposes only. And please smash that like button and subscribe, because I know you guys want to hear us talk about, a lot of other stocks. And I know I'm improving my articulation. I'm improving how I talk about stocks, and I'm improving, my ideas. And I'm gonna put more, maybe put everything on a side. It's gonna be like a board on the side. I'm gonna put a lot of Word documents so I can lay out all the things I'm gonna talk about. And for those of you who just want to look at, the verbal thing, you can just take a screenshot and then just, use these information at your own discretion. But finally, to recap, the 30% drop today is basically predictable, because they essentially issued more shares to the underwriters, and because it's a potential dividend capture. And this dividend capture essentially tells you that a lot of people are saying that the dividend might be $3. Okay, and for those of you who worry about the hedge funds fucking us over, there's also probability that they're just fucking us over before they cover their shorts. But anyways, see you guys on the upside. Tomorrow's gonna be a great day, because tomorrow is when JPOW is gonna talk about another thing about the market, the Fed or whatever, and inflation is not going anywhere again. So for those of you holding on, or you have diamond hands holding on your energy stocks, good for you guys. And I'm gonna keep cover TRCH, and I'm gonna cover a lot of other stock that a lot of other streamers are not talk about. So if you have anything in mind that you want us to do DD on, please leave a comment. And again, we're not financial advisors. We do not give you guys financial advices. Everything is for shits and giggles ever. So see you guys on the upside.